Hello friends, welcome to another video of TradeLikeFxmakk. So as you know, as you can see, this is going to be a masterclass on risk management. After this video, trust me, you will not need to see any other videos. Not a single one. Everything in depth will be broken down over here. I have created an entire roadmap for you which we'll see now. So beginning with the first point. Calculate your win rate. Risk management, what maximum of us know is as that, for example, I am taking a trade, my entry and stop loss should be defined, I should only risk 1%. That is what we all know, that is what is taught on YouTube, that is what your trading influencers teach you. Now let's understand what exactly is risk management. What are the mathematical formulas for that and how is it done? First thing is you need to calculate your win rate, total trades in which you are profitable. Okay, so this is not something which I need to tell you guys already know all this. Second thing is calculate your risk reward. It is very important. You need to know your risk reward in order to calculate your risk and in order to have the proper risk management. Now these things don't happen randomly. See, I have written over here, this calculating win rate is very important. It is not random. It is on the series of trades, on series of how many trades does your edge work. This is something that you have to find out. No one is going to come and tell you all this. No one. And even if you have heard from somewhere, from where you learned your strategy, that the win rate is 50 to 60%, it does not work like that. The edge works different for each and everyone. What you see is completely different from what the guru has taught you. You need to back test and forward test and calculate this. Trust me, if you have not taken at least 20 trades with your strategy to calculate your win rate, a bare minimum of 20 trades, then you need to do this. You need to focus on this right now, rather than on the strategy, rather than on profits, rather than on risk management. 20 trades is the bare minimum to calculate win rate. Minimum, I say. So you need to do this experiment by yourself. Okay, take 20 trades in a live account. If not a live account, take it in a demo account, but in the same way, carbon copy the same way as you will take it on a live account. The same way, no changes, no nothing, exact same way. You need to do that, and after doing that, you need to calculate your win rate. Now the total amount of, see, there is an example over here. If you took 20 trades and got a win rate of 50%, means you win 10 trades. So plan your risk management in such a way that your account is never blown. Your account should always be less than 70 to 80% of it. See, what I mean is, simply after taking 20 trades, you must not blow your account. That is why we are calculating it on a series of 20 trades, because we know that our win rate, wait a second, I'll explain you in detail. See, what win rate is, that it shows you an edge, that I will win so much percentage of time with an average of this RR. Now simply when you have calculated on a set of 20 trades and you know that your win rate is for example 50% and your RR is 1:2, so you are profitable. Now on 20 trades you have calculated and you know that you lose 10, you win 10. That means that after taking 20 trades you will not blow your account, and even if all 20 trades go in loss, you know that your account will not be blown. You will still have some particular balance left in your account. That is what I mean. That this comes after the testing part. See, these are two different phases over here. This is the testing phase over here. This you have to test. This is the testing phase. After testing, this comes. After you know that, yeah, in 20 trades my edge is working perfectly, I am not losing, I am consistently profitable on a set of 20 trades, then you know that this means that in 20 trades I'm guaranteed that I won't lose. So always the risk management, see, this is a very important point. We are going to discuss it further while taking examples. Now let's see, let's move ahead. Keep this point in mind. Okay, I'll show you where it is discussed. Now calculating win rate and RR, there is also a very big debate on this in the industry. Some gurus say that high RR is very important. Some say that low RR is okay with high win rate. Now it is completely on your psychology and your strategy. What fits you as a person is what you have to select from these two options. Now after these two, let's go to the next point, third point, the aftermaths. After you know your win rate and RR, simply you have to know that how much you are willing to risk, not per trade, per month, per week, per day and per trade. Okay. Now as swing traders, we know that we are not supposed to take more than one trade a day. So if we eliminate the day part, we only take the per trade, it is okay for us. Defining all these are extremely important. Don't miss a single. I know that you guys think that this is too much while trading, but this is how trading works. It is a business. It is not that you get up in the morning, you feel like trading and you just are sitting to trade. See, defining your rules, you should have monthly overall loss. It is very important. If you say that I will risk 10% monthly, if your account is at negative 10%, you close trading for the month, no matter how best setup you get. That is what discipline is. Now one more very key factor, difference between prop firm and real account. This is very important. First of all, understand that on a personal account, risking 1 to 2% doesn't make sense at all. Why? Because first of all, you are having, see, if you are trading a prop firm account, you're just paying around if I'm not wrong, you're paying around somewhere around $80 to $100 to get a 100k account. What you are paying is just 80 to 100k to get a 10k account. Sorry, my bad, not a 100k, to 10k account. Now when someone deposits 10k of his real money, he doesn't want to make 100-200 bucks on that. He has not risked his money for that. So when he's trading a personal account, the risk increases. Now this is only for advanced traders, guys. If you are beginners right now, stick to the normal risk to reward. Don't just skip this point. This is for advanced traders who have an edge and know that they are at break even or at profit. If they are a break even or profitable trader, then only consider this point as valid, because trading a personal account is very different from trading a prop firm account. Now also, many people are in a belief that while we trade prop firms, we give the $100 to get a $10,000 challenge. Guys, the $10,000 challenge that you are getting is not $10,000. What you are getting to risk is the account. I've written it over here on a prop firm. While you are risking 1 to 2%, you are actually not risking that amount, because while you buy a prop challenge, you are not given the entire account. You can trade only as much as your drawdown. Now see, I have explained here with an example. If you have a $5,000 account, for example, which you buy, you can't trade the $5,000. What you can trade is just the $500. You have to manage your risk according to that. You don't have to manage the risk according to the $5,000. Yeah, so basically, while you're risking 1%, you are not risking 1%. You are risking 10% of your account size. And the hack to prop firms is risking more only. You cannot be risking around $5 on a 5k account. That will not lead you anywhere. So the risk reward on prop firms is very different from real account. The risk management which you do there is very different from the real account. That is what I'm trying to explain you. These are points that come from experience. This is something that your day-to-day trading gurus cannot tell you. Now let's see the next point, summing it up. Now after we get all the calculations done, let's see how you should actually risk. The only topic that is worth to be discussed in risk management is nothing but having an edge and being profitable after a series of some trades where the edge is tested and proven. Just forget all this. What actually is risk management is, after managing your risk, after doing everything, you must be profitable. That is it. That is what risk management exactly is, to be summed up. You cannot define that how much you will win per trade. See, that is something which your loss will decide. You have to decide your loss. You have to see that what my loss is, how much am I going to lose. That is what will sum you up. That is very important, guys. So see, for example, if you place a trade somewhere, and if you see this is a 1:1 risk to reward, okay, now if I increase this is the 1:2, but imagine if that price breaks 1:2 and goes 1:3, you'll hold, right, in a flash crash. So the profit does not matter. After 1:2 RR you can get anything, but the loss matters. You cannot just, if the stop loss hits, you cannot just boom. That will spoil your risk reward. It will spoil everything. It will spoil your entire calculation. It will spoil your edge. This was it for today's video, guys. This is so important. Now let's just see a quick example of it. See, let's see an example. Now this is a $10,000 account, okay. We are going through the steps which we discussed. Calculating win rate. We calculated 50% win rate, okay. See, 1:2 are our risks. We see, first of all, this is the very important point. Series of 20 trades. Let me copy this and paste it up. Yeah, after a series of 20 trades we get to know this, okay, that our win rate is 50%. Our RR, our average RR, see, RR also sometimes you'll get a 1:3, sometimes you'll get a 1:4. Your average RR is 1:2, okay. Now what are my risks as defined over here? See, the third point, aftermath. Let's take it here. The risks are 20% a month, which sums up to 5% a week, and which sums up to 2 trades a week. So I will be risking 2.5% per trade, which will be 5% a week, which will be 20% a month. That will be my risk calculation. Now guys, let's go over here, showing you this point which I was discussing on series. Now see, this I have written over here. On a series of 20 trades require 2.5%, which is what I risk per trade, multiply by 20, because my edge works on a series of 20 trades. That is what I have calculated. See, what traders do is they do not know on how many set of trades is an edge calculated. When your influencer says that he has a 60% win rate, he must have taken hundreds of trades in the past which has got him to that percentage. So you can risk 10 trades and you can lose 10 trades in a row. You don't understand that. You need to understand from how many set of trades is your win rate calculated. This point is so important. Like, I can emphasize a lot on this, guys. You understand this point. If you do not understand, just see the video repeatedly again and again until you clear out this point. Because if you have defined an edge on a set of 20 trades, and now after losing 10 trades in a row, you say that no, now my strategy is not working. I lost 25%, because we were risking 2.5% per trade. So already I have lost around 25% after 10 trades. So I'm going to stop trading. See, that is what usually traders do. That is the biggest mistake, guys. After those 10 trades, your win rate was 50%. It can be that you will get a series of 10 wins also after that. It can be, because your win rate is 50%. Yeah, sometimes this varies. This win rate is not fixed. It changes according to market conditions, but it stays somewhere near what you have calculated based on a set of large trades. 20 trades is the bare minimum, I say. Actually, win rate should be calculated on 50 or above trades. So these are the risks that we defined over here, 20%, 5%. Now what the series of trades, see what this statement over here means. What this statement over here means, that after a series of 20 trades which require 2.5% per trade, multiply by 20, because my strategy I have tested on a series of 20 trades and I have a win rate of 50%. So I will just risk 50% of my account. Means I can run this entire setup again. Like, even if my win rate doesn't work accurately, even if the strategy's backtest doesn't work accurately, you have 50% in your balance left. That is what I mean, that after the set of trades have been completed, and if all of them go in loss, still, which is not quite possible, it is not possible, but still calculating the worst case is very much important. You should have 20 to 30% minimum balance left. This is how you will manage the risk, guys. This is something that not everyone will show you, guys. So according to these statistics that we wrote over here, we get a total trades of 8 to 10 trades per month. Okay, we risk 2.5% per trade, which is 20 to 25 risk per month. So here we had written that we want 20% risk only per month. So according to that, I have written over here, anytime if the account reaches negative 20, you stop for the month. You stop for that month. You do not continue to trade more. Now, one very important point. Everything is fine. Whatever I taught you over here, whatever we learned over here, everything, everything is okay. This is the main point of risk management. This is it. This is the main point of risk management. This is what risk management actually is. Everything is fine, but always remember, risk management is up to the individual person, not up to the strategy, YouTube video, trading guru, influencers, whatever this is. It is up to your psychology and what you feel comfortable risking. See, what happens that sometimes after the stats, you have a $10,000 real account, for example, and you will not be comfortable risking $250 per trade. You won't be comfortable risking. So increase your risk, decrease your risk. If you're not comfortable, if you cannot hold the trade, if you get psychologically affected after hitting a stop loss, after hitting a series of stop loss, decrease the risk. These statistics would never lie. These statistics would never lie. This is in front of you. This is what it is. This is in front of you. This statistics will not lie to you. But also, very importantly, your psychology is very important. If you are not comfortable with risking a particular, like if your monthly expenses are $500 and if you risk $250 per week, how is it going to work? Per trade, sorry, not even per week. It is not going to work. You are going to get mentally disturbed after one loss. So guys, that is summing it up like this. I have one more video on my YouTube channel which was on risk management only, and that I had emphasized on this in detail, that it is up to an individual person. On this video I showed you the maths also behind calculating the risk management and having the perfect, this will give you the perfect risk management, guys. Anyone having any doubts in this video or any questions which you feel, and if you feel that this would not work, put it in the comment. I'll read each and every comment and I'll reply to everyone. Also, that's it for today, guys. Remember this point. This is very key, very key. If you would ask me risk management in one sentence, this would it be. Everything is fine, but always remember, it is up to you. It is up to the individual person. So that is all for today, guys. Let me know if there are any topics that you would like me to cover in the comment section. So we will look forward to make videos on those topics in the future. And don't forget to join my Telegram channel. I share my analysis and a lot of knowledge and insights over there. More than analysis, the knowledge and insights are very valuable. So do join the Telegram channel. That's it for today. FXMAKK on this side. Thank you.